morning to each and every one of you on behalf of IBG. Myself, Simran Ahuja, takes this opportunity of welcoming you all to one of its kind, a very unique webinar. And we are truly delighted to have with us our esteemed dignitary and our guest here with us, Mr. Abhijeet Kumar, the founding partner of our Ventures. And we're going to talk about raising funds and angel investing during the troubled times. I'm truly thankful to all of you for being here with us. And let me just please a gentle reminder to all our lovely family who's here with us to please have your videos off and to put your audios on mute as well. So this is a regular feature which we're going to start from today, where we will let you all come in 3 minutes prior to we beginning the session, so that we can all see which friends and colleagues of ours are here with us, and we can always send them a private message, whatever you feel comfortable. So I'm going to once again thank each and every one of you. And as we know that, yes, we have a few of them who are joining us here. It's time for me to welcome all our new members who are here with us, to all our new friends who are here with IBG today. So I'm going to take this opportunity of welcoming you specially, because I'm going to request you all to send in your email and your name and your contact details in the chat box, that we could let you know of the future webinars as well. And now to begin with, yes, my dear lovely friends, we are truly honored, to have with us our guest who's here with us. I can definitely call him our chief guest, Mr. Abhijeet Kumar. But before that, let me tell you what IBG is all about. Well, my dear friends, India Business Group is a modern non-profit chamber of commerce focused on mentoring and supporting Indian businesses to help them grow into global corporations. IBG was founded by Sri Vikash Mittersain, who's a philanthropist and a leading light of the Indian industry, with over 38 years of stellar industry experience of giving diverse businesses to more than hundreds of crores in turnover. He's currently the chairman and managing director of Nazara Technologies and the honorary consul general of Mali. Well, as we all know, he's also the author of 3 books, 4th and the 5th book, to be launched pretty soon post the lockdown. So we are truly thankful to Mr. Vikash Mittersain, our business guru, for giving us this IBG family, which is one of its kind, where we all be the best in our entrepreneur arenas wherever we belong to, and we make sure that we be the best version of ourselves. And I want to mention this to each and every one of you, that Mr. Vikash Mittersain had some commitments, so he will join us later in the session whenever possible. That is, if possible. So we're going to welcome him whenever he's here with us. But nevertheless, we do have a very dynamic CEO here with us. That is Priya Pansare for the IBG family. Yes, she's the one who really makes us be in the comfort zone. So I'm truly delighted to welcome the very beautiful and magnificent Priya Pansare for the inaugural welcome. Hi, Priya.
Hi, Simran. Thanks a lot for such a warm welcome. Hey, good morning, guys. Hope you all are following our IBG page and receiving updates on all the activities that's been conducted regularly. So we call this webinar as Knowledge Cafe session. And I'm sure everyone there is getting a lot of information from these sessions that we are holding. Today, we are presenting the co-founder of our ventures, Abhijeet Kumar. He has an amazing story to share with us on how their Mumbai-based firm built a global network of 750 investors. You may have often heard of startup ideas or two emerging from sleepless nights doused on alcohol, but what is rare is an idea to set up an investor network venture fund born over a pint of beer. So here we are. Let's hear it all from this genius. Abhijeet, I'm really looking forward to hear from you. Over to you.
Well, you know what really interests us in the finance world is anything related to finance, and especially during COVID-19 and this point of time, all we look towards to is some guidance, and who better than our guest here today, who's also our chief guest, Mr. Abhijeet Kumar, the founding partner of our ventures, who shall really give us a lot of insight on raising funds and angel investing during the troubled times. So I'm truly delighted. And before we welcome him and hear from him, I'm going to once again request all my lovely family of IBG and for all our lovely guests who've joined us to kindly have your audio on mute and video off, please. A humble request to all of you. Your audio is on mute and your videos off, please. I promise towards the end, we're going to have a group photo op with our honorable chief guest. So we shall definitely do that. But as of now, yes, I'm going to request you all to please make the most out of this wondrous webinar that we have. All right, to all my lovely dear friends, please allow me to introduce Mr. Abhijeet Kumar, the founding partner of our ventures. He's an IIT Bombay alumni. He's worked with Deloitte Consulting as a consultant, the founder of fundraising platform Our Ventures, which has done 55 investments in 40 startups totaling to 170 Indian CR and 25 million USD with 6 profitable exits and 3 acquisitions. He's the founder of tech company Pronto Infotech. Mr. Dharmendra, can I please request you to have the video off, please? Thank you. Appreciate that. He's the founder of tech company Pronto Infotech, which has 50 plus employees and has offices in Mumbai, Dubai, and London. He's worked with many top Indian and international corporates in various sectors as our clients on their processes and IT automation. He's a core team member of Startup Summit and Startup Conclave, investor and board observer in 10 startups, 40 under 40 award by Business World, 50 fabulous innovative leaders by World Innovation Congress, ex-investment committee member of SPTBI Nidhi Seed Fund, and the ex-faculty at Prahlad Kakkar School of Branding and Entrepreneurship, visiting faculty and guest lecturer at multiple educational institutes, and he's also a speaker at various domestic and international platforms and forums, and a jury and judge at various pitch, demo days, and startup events. Yes, it's truly an honor for me to have him here. If I read his profile, it's going to probably take me the entire webinar session. So without any further ado, I'm going to request Abhijeet Kumar to come with a smile. I know usually finance guys never smile, and I haven't seen you smile since yesterday. So thank you for that bright smile because it makes me comfortable. So welcome each and every one of you for the Raising Funds and Angel Investing During Troubled Times by Mr. Abhijeet Kumar. Thank you, Mr. Abhijeet, and a global namaste to you.
Hi, good morning, everyone. Thanks a lot, Simran, for the lovely introduction. And thanks a lot, IBG, for getting me to this, great webinar, a great platform. I know Vikas for a while. Nazara has actually invested in one of our portfolio companies also. So I know him for more than, I think now 10 years. Priya, I know her for quite a while. So IBG early days used to organize the networking sessions in Tote. So from that days, so those were the old days. Now I'm little less in networking because of other factors. But yeah, amazing sessions we used to have. Before I get into the topic, I would quickly touch base upon how the journey started, and I'm going to keep it very informal. So any member, if anyone has any question in between, please feel free to either ask or raise hand or whatever the process is. The more questions, the better it is, because it's a little complex topic. People don't know about it. So I think Q&A will help everyone rather than me talking and giving lectures, right? So, after graduating from IIT, I started the tech company, which was my first venture. I worked in Deloitte for a while, but that was very short stint, about 1.5 years. And then, Pronto Infotech, which is now about 60 plus people, offices in, as Simran mentioned, offices in London, Dubai, and Mumbai. But we specialize in solutions for BFSI sector. So we mostly work with large sector banks. So that's how the whole journey started. That's my bread and butter. Me and my very old close friend, one of the dearest friends, Harshad, we were in 2009, we were sitting around and discussing about the angel investing scenario, because Mumbai Angels and IN were the two early angel investing networks at that point of time. And they started investing at that point of time, Ola, Housing, these kind of people came into picture. And I knew about angel investing because IIT Bombay, it was little common, generally you raise money from alumni. It used to happen at IIT Bombay. So we thought of starting our own, I would say experimenting with angel investing. So me and my co-founder Harshad, we formed this company, but it was idle. We were using it for our own investments. So both of us have more than, in personal capacity, more than 60 investments right now. That's beyond the Avengers portfolio. When we learn the trait of the angel investing on our own, these are smaller amounts, not very big, but yeah, when we learn the trait, then we thought, all the other angel networks at that point of time, which I mentioned, my IN Mumbai Angels were very investors focused. You have to be investors focused, but not so much. So because entrepreneurs are the key players in this whole, fundraising game or exit game. So we thought of building up a entrepreneur focused fundraising platform, and that's how we were just chilling in one evening, and then we thought, okay, let's start inviting some of the friends and start building this network. That's how we in 2011 we actually reactivated the company and got some of our friends, close friends, to start and join us and start investing. And 2012 we did our first investment. It was an education company. And then things just went ahead, and we were never supposed to make it another big company, but things moved on and then became bigger and bigger. So now we have done about close to 56 investments in about 42 startups, touching about 180 crore INR, which is about $26 million. We help startups raise funds up to $10 million. So we have two platforms. One is sub-$1 million, which is mostly for angel investors. And one is a larger platform, which is $1 to $10 million, which is for high ticket investors, funds, institutional investors, family offices. So now we cater to both kind of startups. As far as our track record is concerned, we have 9 exits till now, IRR ranging between 30 to 90%. Some of them are partial exits, so we are hoping to get IRR up to 200, 300% in some of them. So that's what we have been doing. We are a sector agnostic platform. So we have invested in almost all sectors, whatever you can think of. Some of the known ones you would, if you are there in the, if you read startup ecosystem news, then In42 is one of our portfolio company. If you donate, then Keto is another portfolio company. There are lots, but these are the known ones. So this is what we have been doing as a platform. Now the platform has become much bigger. We have a presence across 25 cities with our venture partners. We are the largest entrepreneurs network right now in country. More than 60,000 entrepreneurs registered on our platform. And Priya mentioned 750 investors. That was old number. Now we have 3,000 investors, 2,000 individuals, and 1,000 big ticket investors. So this is what the all platform is all about. I would like to come back to the main topic and share my quick views on raising fund and angel investing, both sides of it. Please feel free to stop me if you have any query or if you want to ask. Angel investing is still new for India. It's still not as matured as US or Israel or China or other developed economies, but yeah, it's picking up. So if a lot of people keep asking me, is it a bubble? Startups are a bubble, or is angel investing a bubble? So we are not even tip of the iceberg right now. We are very few in numbers for such a large country. So there is no dearth of money, and there is scope of a lot of more startups for a country like India. So I'll quickly give you a simple example, numbers which a country like Canada has more than a million angel investors, which is more than 10 lakhs angel investors. US is much more. whereas India is more than, India would be a handful of maybe about 5,000 investors, overall angel investors, because that's how big the difference is, and that's where we have to reach. Obviously, the number of startups are picking up quite a lot, so there's a lot of scope of on both sides, startups and investors both sides. So after this COVID situation, there have been some changes. So for all the startups out here, I don't know how many of you are startups and are looking to raise funds, but there is a very big fundamental difference between a startup and a normal company. SME, why a startup is called startup and why they're able to raise funds, why a SME can't raise funds so easily and have to rely on loans. I would like to clarify that, because some of the businesses might be conventional and old style. Startup which is looking to raise fund has to have a very high growth rate. So for example, a normal company, for my tech company, growth rate is about maybe 10 to 20% annually. That's a growth rate for a standard IT company. Whatever I do, it can't change, yeah, right? Because the IT sector is matured. There is no way you can grow it to more than 20%. That's very tough. So that's a normal conventional company. It comes under MSME, SME. Now, when you are out to raise funds and when you want to be called a startup, your growth rate has to be 10 to 20% monthly. That means you need to at least have 100% growth rate annually in your initial years. If you are not able to prove that on paper or in actual, then raising funds become very challenging, because then you are not under the definition of startup. The government of India has defined a lot of criteria to be called a startup, but this is the actual criteria. The growth has to be humongous. Now, because then only it makes sense for investors to invest at such high risk. Because if they are not seeing the return on the investor side of it, they actually look for minimum IRR of 40 to 50%. Early stage investors, angel investors, 40 to 50% means you are looking to double your money in 2 years, which is quite aggressive. Now, if you want that kind of return, you need a startup which can grow that fast so that they can raise future rounds and return the money back. So it's not easy for both sides. So that's why a lot of SMEs which write to us that why can't we raise fund, happy to support all kind of businesses for raising funds if they can match the growth rate. That means you need to tweak your business, you need to tweak your financial model, you need to tweak your business plan to achieve that kind of growth rate. If you can do that, there is no problem for even a conventional business or a SME to raise funds through private investors. So this is what I clarified, the basic difference between the old style business and a startup. So a lot of people get pissed also and ask me also, we are doing such good business, we are making profits also, still we are not able to raise funds from private investors. Same difference, private investors don't invest money because they are making profit. Private investors make money because they are looking for 4x, 5x, 10x exits. That cannot be achieved if they invest in a company which is just making profits. It has to be much beyond that. So, after covering this basic differentiation, let me also, I just saw a popped up question, burning cash heavily. Yes, that also includes burning cash heavily, because you can't attain that growth rate without burning cash heavily. So burning cash is not a taboo in startup world. You have to grow, so you have to burn cash. You burn cash, you raise more, you grow more. So it's not an easy game. Once you get into fundraising, it's an infinite cycle. So, anyways, I'll take the questions also later before I cover these few points, which I've noted down. So, after this COVID situation, raising fund is gonna change a little. Uh, I think people who are from startups industry or SMEs or who are looking to raise funds from private investors. I'm only talking about private investors. That means VC, angel investors, uh, 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 PE funds, not old style listed investors. So people who invest into SMEs, MSMEX or loan, they are different kind of investors. Now, raising fund for now, it'll be more curated and stricter. So investors will be giving more focus on a lot of curation factors now. Previously, it used to be easier, a strong team, idea is good, investors would invest. But now investors would like to see much more. There may be curation criteria. We'll have now 10 criteria in place of 5 before. As I've been saying that 2019 was a year of valuations. Now 2020 will be year of cash flows and profits. So now startups have to even attain that high growth with profits. Now that's what private investors are gonna look for. Startups who have high growth rate and will become profitable in near future or are profitable. They wouldn't be looking at startups who say we'll never become profitable. Those kind of startups might not raise funds now. For example, I'll give you an example. Uber got listed in US. They said, we might never become profitable. You are just privileged to be a part of our investor group. So those kind of startups might not get funding so easily now until you have a very out of the box product. Most of the investors now we are meeting for raising funds for various opportunities on a platform are now looking for cash flows, now looking for projections where startups can become at least operational profitable in next few years. Some are even looking at EBITDA level profitable, which is a very high expectation because you have to sustain the growth also and then also become profitable. So imagine growing at 100% year on year and still becoming profitable. Again, with high growth rate and profitable coming into picture, even more startups who have more digital processes in place, I would say workforce in place would find it easier to raise funds rather than startups which has a lot of feet on street. Now the feet on street has to reduce, and most of the processes have to convert into digital, whichever is required, and whatever processes were not required have to be converted into digital. So now you can't do random meetings, random sales meetings, operations meetings, because these are the factors which might not excite investors anymore. Because with the current situation, next 1-2 years are gonna be tough. So investors need startups, businesses to move to digital processes. At least have a vision that how will you manage business with increased digital processes in place. So that's gonna be a big factor for all the startups which are raising fund. Another big factor is cash management. Now, with the current situation, a lot of investors are now looking at how well you are managing cash. That requires delaying employee salaries, or cutting their salaries, or maybe increasing your profits, or requesting your lenders, businesses, investors to give more cash. So cash management is the key. Now that factor is also got added in the evaluation criteria. Previously, it was not so important because once you raise investment, you deploy the money, you grow the company, you again raise money, and it's a cycle and it keeps going on. So nobody was bothered about cash management. But now even good startups will have to justify how they are going to survive with lesser cash burn compared to before. A lot of people, you must have done your financial projections, investments deck. Previously everyone used to do investments decks and financial projections on very high level projections, reaching skies. And investors will also assume, okay, even if this guy reaches 50% of what he's projecting, he or she is projecting, it's fine. We still make money. Now the scenario is changing. Maybe investors are now looking at 3 years down the line, startup becoming profitable, or 3 to 5 years. That is what the scenario is now. So it's not only the growth now investors are looking, it's your financial projections have to now talk about profitability, talk about becoming sustainable. It's a big factor now. even the biggest of funds are now looking for this kind of, I would say, criteria change now. These funds never used to bother about profitability or becoming sustainable before. Projections have to be, continuing to the same point, projections have to be realistic now. You can't do unrealistic projections anymore, because if you do, and if you raise money and if you're not able to sustain, you will burn out and you will close shop much faster now because of the changes in the whole global environment. So now you have to do realistic projections. Your projections have to take into account of pandemic factor. So your business delays, your business payments delays might happen. All these factors will come into projections, become realistic. Otherwise, the burn rate, the closure rate of startups will increase. So more matured founders with good financial sense, a good cash flow, balance sheet management will be able to raise funds now even faster compared to what used to happen. Previously, a good founder, good business idea, people used to fund. But now you need to have a very strong, I would say, a balance sheet or a projection with all these to raise funds. So a lot of startups, a lot of people keep asking me as on the bubble question, is there a short of money? Let me tell you, there's no short of money. Indian funds have more than $1 trillion to invest in early stage startups, and they don't know where to invest. So it's shortage of startups. There's no shortage of money. It's $1 trillion, more money can be raised. Everyone wants to invest into India. So there is no shortage of money. So there is no bubble, there is nothing. Even if they waste $100 billion, doesn't matter for them. They are sitting on such large pile of money that they can keep wasting and they don't care. You all know about SoftBank. They've already written off more than $100 billion. They don't care about such amounts because they're sitting on trillions of dollars. Where would they invest? India is the only country with high growth potential and high returns now available, except US and Israel, few other countries, where all their startup ecosystems are matured. India is still developing. Post-COVID, many new sectors will also become fundable now, which people were not considering before. For example, sanitation will become fundable. Garments industry with high focus on hygiene will become fundable. Hygiene related startup will become fundable, which was not considered before by investors. Healthcare, a lot of innovative healthcare will come into picture, which will become fundable. So a lot of new sectors will now become open for funding, which might fall into conventional and investors might must be avoiding before. But now they are all open to even such kind of startups, to consider for funding. Now, I think startups funding, I've covered overall high level points. I'll answer to more questions maybe later, but from the angel investing point, because we are an angel investor platform, I personally am an angel investor, so I'm going to talk only about angel investing. Angel investors are people who are going to invest between 5 to 25 to 50 lakhs or 1 CR, depending upon what their capacity is in each startup. Those are the people which are called angel investors. They support startups at very early stage. Some even when the product is being made, or when the product is made and out in the market, have some initial traction. So that's the level when angel investors get into picture. India will see surge of angel investors in future. It's still very low for a large country like this. We should have more than 5 million, 10 million angel investors by now, but we have about 5,000. A lot of CXOs are now becoming angel investors. Many more top tier people are becoming angel investors because the real estate in metros is already saturated. Mutual funds and other conventional stock listed, all is very volatile. It keeps changing. You can't make so much of IRR. So now a lot of big ticket investors, conventional family offices are now looking to park some money in the high risk startup criteria. Startup investment is also same like stock listed. You have to build a portfolio. So for all the angel investors out there, don't think that you will invest in one and you will become, a billionaire. That's a very rare opportunity. So you get 200, 300, 500x returns also, but you have to be very super lucky for that. Otherwise, it's all a portfolio game. You invest if you have a 50 lakhs to invest, you invest 5 lakhs in each 10 startups. Don't get excited. It's addictive thing. Once you start investing, it's very addictive. You want to invest in all because everything feels exciting. So you need to control that addiction and urge and invest into maybe build a portfolio. So do whatever money you have. You have 20 lakhs and then do 2 lakhs in 10 startups. If you have 50 lakhs, do maybe 3 to 5 lakhs in 10 to 50 startups. The math is simple. 50% of the startups will get bust, or maybe more, 60, 70%. 20% will give you nominal return or just get the money back, and the last 10% covers for your whole portfolio to give you minimum 20%, 30% IRR on the overall portfolio. So that you need to have that last 10% to make money over the portfolio. Now if you only invest in one, the chances of getting that last 10% is very rare. So that's why a lot of angel investors in India are not able to make money, because they will try one or two and they'll lose money, and then they'll say, okay, it's not working out. Listed also, people who are there for longer make money. So it's the same philosophy. Again, angel investors are also have to be more cautious now. As I already mentioned, they have to consider more shortlisting criteria, have to be more curated. More scrutiny has to be done on startup founders' business idea, their business plan, financial projections compared to before, so that they don't lose money so fast. Because now if the cash flow is not strong, the business plan is not strong, the chances of startup going down the drain is much higher. So I would suggest all the people who are already angel investors applying to become an angel investor, take help of somebody who can guide them throughout the process. So it's always suggestible to go through a platform or a network. If you want to invest, that gives you, make sure that the whole process is followed, proper due diligence is done, only curated startups are shown to you, so that the chances of success and your money coming back is much higher. A very big disclaimer to all the people.
इन्वेस्टमेंट जो मांगता है ना, वो भी ऊपर ऊपर का बोलता है, उसको भी डीप नॉलेज नहीं रहता है.
Yes, I'll cover that. I'll take that as a question, uh, on the experience of founders. I'll take that as a question. But yeah, as I was saying, it's always safer to go through the regular platforms or networks, so that your whole due diligence is covered, legal processes are covered, you get proper rights documentation, share certificates, everything. If you try to do it on your own, you might, founders will say this is not necessary, we'll skip the documentation, and you will land up in soup later. So bigger investors might kick you out without any return, or founders might forget about you. So it's very important to follow the proper legal documentation, proper due diligence, and things like that. Also, the focus on valuation will drastically reduce now. So startups have also started valuating less after COVID. So they are now becoming more mature. They are asking for less valuation. Angel investors are people who like equity, because they are taking very high risk investing at an early stage. So they want equity. So now with the post-COVID, startups are also, offering more equity because they understand the situation now. So valuation is becoming now sensible, which is good for, because more investors will come and join hands and work with these kind of startups. I think overall I have covered all the points about angel investing and fundraising, most of the parts. The only last thing is, this is the right time to become an angel investor. Start building your portfolio. If you have any platform or network, start investing with them, or write to us. We'll be happy to help you there. I think, Simran, I'm done. I think covering most of the points.
Sure. So thank you very much, Mr. Abhijeet Kumar, for sharing with us your expertise and giving us great and bright insights about raising funds and angel investing. And we have lots of questions. As we all know, we're talking about finance and we're talking of investments and funds. So we have a lot of questions. So I'll try and take as many as possible. I'm going to request you all to have your questions in the chat box, please. And the first question is, what sectors will have a tough time, according to you, raising funds in the current scenario?
So I already mentioned that the sectors which are very conventional, offline driven, like food, restaurants, hospitality, travel, heavily offline driven, these will have tough times in the next maybe 6 months to 1 year. Yeah.
And will the funding criteria change, or is it going to remain the same?
So we have increased, we have made our funding criteria much stricter now. So we used to heavily shortlist startups on the basis of founders profile. That's still the main criteria, but now we are even focusing on their financial projections, getting deep dive into that and looking into realistic projections. Yeah. So also the sector what they're operating on, what kind of processes, automated processes they have. Yeah. So funding criteria maybe before we had 7, now it has become 10 or 12.
What should the startups focus on to survive right now in the recent time?
Yes, a few points I covered in the my talk, which is very important these days for startups. Is, as I said, startup is not easy. Everyone thinks that getting a startup is easy, and you can easily raise funds, and everyone is raising millions of dollars. I'll tell you one example. We receive 600 mails every month, people who are looking to raise start funds, and we fund one every month, one or two. So you can count the ratio. It's less than 0.01%, or so it's a very tough game, and startups have to have a very high growth rate, which I already mentioned, more than 100%. Now with this situation coming into picture, now they have to become profitable also. So they have to play role of a SME also and a startup also. So it's much more tougher for them. So their processes have to be more streamlined. The entrepreneurs have to be very matured. I would think startups with very strong founding team, matured founding team, maybe people who have worked in industries before will raise funds easily now compared to fresh graduates.
Sure. And what are the preferred sectors for the investors these days?
So a lot of new sectors have come up. A few of them I mentioned, but SaaS-based startups, startups working on remote working, collaborative tools, hygiene, FMCG is picking up, consumer goods, sanitation, uh, uh, maybe in travel, innovation-based startups or virtual travel. So AR, VR startups will pick up more because now everyone wants to experience travel, but they can't go out. Even high-end hotels, sanitation-driven hotels with maybe some kind of innovative model. But yeah, a lot of tech-based startups will get more preference now rather than video. Content and video is also picking up heavily. Two of the sectors heavily. So for example, I'll give you an example. Zoom valuation before COVID was 5 billion. Now they're sitting at more than, I think, $25 billion. So 5x in 3 months. That's the difference which COVID has bought for some of the startups.
Yeah, and I think that figure will change soon because of the Google Meet, though. All right, we have Sunil who says that, do you raise funds for dark kitchen businesses?
Yeah, we used to, but now we'll have to see the business model and how you are delivering to the customers and what kind of processes you have. So we have invested in few food startups also.
And Dharmendra wants to know, is the funding only happening for online platform or also the brick and mortar or click and bricks?
Brick and mortar is the biggest money making for investors. Brick and mortar can never go out of it. But again, as I said, you need to you need to have very strong growth rate. Bira beer, everyone knows. If you like beer, you drink Bira beer. Bira is a brick and mortar. It's a totally offline business. It's funded by Sequoia, one of the very strong portfolio. Most of the VC funds make money through offline businesses. Online is it's more just to do.
Sure. And Dheeraj wants to know that what is the entry level investment to invest in the sunrise sectors?
On our platform, it's 5 lakhs. As per SEBI, it's 2 lakhs. So 2 lakhs per startup is you can take as an entry level investor.
John would like to know, what are your views on the recent India-China feud and boycott China campaign and its impact on Chinese angel investors in India?
We have been getting a lot of such kind of questions these days. So, see, China is sitting on loads of money, but now with the government regulation coming into picture, I think it will become tougher to raise money from Chinese investors. So, but there is no problem now. Indian investors have a lot of money. You have US investors, Israeli investors. So early stage investors still don't have any problem. You can still raise money from China for early stage. It's mostly for listed equity investment if the investment is more than 1%. So early stage is still okay.
Does the investor also avail startup tax benefits on the returns, please?
Yeah. So you get the capital tax benefits now. Our government still has to do a lot of reforms on angel investing. So you can't claim it as a total tax free. It goes from your investments. But yeah, when you get the money back, they have relaxed the capital gain now. The terms are more relaxed now. So it's counted, startup investment is counted same as your listed equity investment with a capital gain. When you earn back money, you have to pay capital gain.
Thank you, dear. I'm going to request all of them to kindly have it on mute. Mangesh, this has happened several times, so please have your audio on mute. It's a humble request to you. Thank you so much. I'm sorry for that, Abhijeet. Mangesh wants to know how to make valuation of the company and ask for the investment and offer stake.
Very interesting question. So valuation is a tricky job for most of the startups. So if your CA says that go by DCF method or go by the standard methods, those don't work for investors. So investors have to be, convinced about, you have to negotiate with investors. So there are 3-4 factors which you need to consider while evaluating your company. Obviously, 3 to 5 years of projection as per your sector, your team profile, IP, patents which you have built, how much money founders have put in, if you have raised previously, at what valuation. The biggest mistake which startups or businesses do while evaluating company, they think of valuating the current round higher, but they forget about thinking about the next round. So you always have to think about 2 rounds ahead when you're evaluating your current company. So if you value higher, then also you are stuck because nobody gonna fund you next after that. If you value lower, then also you are stuck. Then nobody is gonna fund you next. So it has to be very rightly balanced. So get a mentor. I think mentor would be the right person to guide you in valuation.
Sure. Then that's fine. That's fine, Mangesh. But your question was very interesting. So thank you for that. Thank you. That's fine. Absolutely. Tarun wants to know that what does the investor usually look at before investing into any technology-based project?
So any investors heavily look for team profile. So you have to have a very strong team profile. And if you're running a technology product or company, then one of the guy has to be very strong in tech in-house. So you can't have a company saying, I am building a technology product, but I've outsourced it to an IT company. That doesn't work. So if it's a tech company, you have to have a CTO, maybe from a very strong institute. Except that your business plan has to be strong. The market, you need to really think of the problem statement, which is actual a problem statement. So a lot of startups do a mistake that, okay, they know a skill, so they start a business. You are a good cook, that doesn't mean you can start a restaurant. If there is a need of a particular dish or a particular kind of recipe in that particular area, then you can start a restaurant. Your passion always doesn't give you money. So startups, you have to think that way. It's a very blunt example, but that's how it is. I'm good at coding, so I'll start a tech company. That doesn't work. So that way. Thanks.
In fact, we just had a question, where he said that it's ready to eat a good startup to start, the ready to eat foods. A good start. We just had one question,
Yeah, ready to eat. A lot of startups are now coming up with the ready to eat snacking options. So a lot of new companies, we are actually funding one of them, which is into ready to eat breakfast snacking and evening snacking. So and affordable range, 20 to 40 rupees kind of range, which people even middle class can afford. So a lot of high-end food hall, if you know, food hall is all about high-end. A lot of ready-to-eat products are available in food hall. So this is a growing segment, heavily growing segment.
Rajan wants to know that are angel investors still looking for exit in around 2 years? Is the period increasing to beyond 2 years?
It's never 2 years. It's angel investors are the high-risk investors. They don't even expect exits. Ideal angel investors. If you invest money, you forget about money. That's how angel investing is. But yeah, they expect the returns to come 3 years plus. So 3 to 5 years, what every ideal angel investor should look for. As I said, build a portfolio, then returns will come. But otherwise, when we invest, we write it off. So our ventures is also invested in 10 out of 41. So we invest and we write it off. If the money comes back, it's good. But if you start losing your sleep over money, then you are not a right angel investor.
Please throw some light on stake sale vis-a-vis angel investor, asks Rajiv.
Stake sale angel investors are the same, because when you're raising funds, you give equity. Equity is as stake. So because you are giving fresh equity, so it's going out from your company cap table. But you can also do a secondary sale. So you can sell existing equity of any other investor or a mentor to a new investor. But the process is same. It's just the better, if you can say founders equity for the longest time, the better it is. But more than equity, board seats are important. So you should have control. We should try to have control on board as long as possible.
Hitesh would like to ask that are there any scope for present MSMEs and entrepreneurs who have experience of over 15 years in their respective field to get boost by funds as available for angel investing?
As you match the growth rate more than 100%, you can raise funding. There is no science to it. It's very simple. If you can grow your business twice every year by revenue or in numbers, you can raise funding. Doesn't matter what you are doing. You're making, steel also, and if you can grow by 2x every year, you can raise funds.
Right. Mr. Yadav would like to know what is the future of the interior designer businesses right now?
Interior designer business, tech backed, will have, we actually, one of my juniors from IIT runs a company called Flip Spaces, which is a tech backed interior design company. They've now raised about $10 million. So they have automated the whole interior design process. So this is growing, and with the more co-working, common spaces coming into picture, co-living, interior design will grow financially. WeWork is all about, WeWork works on that philosophy. They take up whole buildings and then they manage the whole building. So it's all managed spaces now.
Abhijeet, we have around 50 more questions, but we'll take the last one. Okay. This is from John, and he says the online educational sector has now become commercial with Byju's, Unacademy, Upgrad. Is there any scope for budding teachers, professors for growth and development?
So very interesting. We have a portfolio company in the similar lines, Textbook, which has also raised substantial money, and they have given about 5x return also. So education is always a green sector for investors. Doesn't matter how many companies you have, how many unicorns you have, education will always be a dear sector for all investors, because education always works in India. So if you can come up with a product with strong technology and still, change maybe a particular sector or a tier 2 city or a tier 3 city, you can easily raise funds in education. In our portfolio, the highest number of companies we have invested is in education, about 7 to 8 companies.
Sure. And we just take one more, and we just have the last question, which is, pretty much interesting on my screen. So it's very much interesting.
Yeah,
okay, so what's the angel investors' demand profit share in investment?
finally you managed to find an interesting question out of, yeah, very, very right question actually. So angel investors don't take any profit sharing. They believe in exit. So basically when their equity gets sold to another company, or a new investor will come into picture, they'll give exit to the current investors, and that point of time they take back all the money. But there is no profit sharing asked from any angel investors. Now there are some funding happening which is revenue based. So in that case, investors take money out of your profit, but then that they don't take equity. So either you give equity or you give profit share. That's, that's the whole model. I think for rest of the questions, you can share my email ID and other details.
Sure.
They can write to me later.
Exactly what we wanted to know, and we've been asking your contact details. So, Mr. Abhijeet Kumar, may I please request you to have your email ID? We'll
Yes,
announce it here and have it in the
it's
chat box too.
yeah. Okay, I'll put it in the chat box. I think that will be more easier.
Yes,
It's Abhijeet at ahventures.in. I will also, I'm also sharing it in the chat box.
Sure. So it's Abhijeet@ahventures.in. You can connect with him. It's already in the chat box. And I'm going to take this opportunity of thanking everyone who's been here with us, the entire IBG family. And thank you, Abhijeet, for, of course, the great insights that you gave us, but also to clear every single question in such a brilliant way. And I'm going to now request Priya for the concluding remarks and for the vote of thanks as well. Priya Pansare, our CEO of IBG. Over to you, Priya.
Abhijeet, what an impactful session this has been. I'm sure you're going to get loads of inquiries after this webinar. And
Thanks.
and yes, and I think many people of us over here would like to join your investors group also. So
Yes. We need to work together on that and get more IBG
definitely.
people.
I was just going to say that immediately after this lockdown, we should do a collaborating event together. Like last time, what we did it in Tote, maybe something on that, or maybe on a bigger scale. Let's plan something and get this on roll. Thank you so much.
Thanks a lot for having me here. Thanks a lot.
Thanks.
It was my pleasure. Thank you. Bye.